Borrowers benefit from bad bank behavior. Hey, it's Eric Ossis here with Homebridge Financial with my weekly update on mortgage rates and the economy for the week ending March 24, 2023. Well, after another tumultuous week in the financial world, mortgage rates benefited from all the chaos. Here's a rundown of some of the key events of the week. Let's start with the Fed. The Federal Reserve Open Market Committee announced a 0.25% rate hike of the federal funds rate. This is expected and did not affect rates as much as Fed Chairman Jerome Powell's comments after the hike, where he hinted that additional hikes may not be necessary due to an overall tightening in the banking sector. Banks have been borrowing heavily from the Federal Reserve, considered a lender of last resort. The Fed's balance sheet has ballooned by almost $400 billion in the last 2 weeks alone, erasing all the progress the Fed has made to reduce the size of its balance sheet over the last year. It's also a signal that the banking sector is still in trouble. And speaking of banks, earlier in the week, Credit Suisse Bank failed, was bailed out by UBS Bank and the government of Switzerland. And on Friday, Deutsche Bank is in trouble as holders of their COCO bonds, those are contingent convertible bonds, are selling off in fear that they're not going to get paid in the event of a failure of Deutsche Bank, like what happened to the bondholders at Credit Suisse. And in a congressional hearing, Treasury Secretary Janet Yellen testified Thursday that the federal government is prepared to take emergency actions to back up regional banks, just like it did for Silicon Valley Bank and Signature Bank. But when asked the day before if the Treasury was considering guaranteeing all bank deposits without congressional approval, she replied, "It is not." Maybe get that story straight, Madam Secretary. Economics. Durable goods were down 1% in February against a forecasted gain of 0.6%. Durable goods are a leading economic indicator, indicating that the economy is indeed slowing. New home sales, though, rose 11% in February to 640,000 on an annualized pace nationwide against a forecast of a 3% decline. That's good news for housing, although prior releases have been revised downward. Looking at housing, there were 436,000 new homes for sale at the end of February. That's an 8.2-month supply. But really, if you look at the homes that are actually completed and ready to move in, there's only about 72,000 of those nationwide, putting our inventory at only 1.4 months supply. Fortunately for interest rates, there was some flight to safety investing going on, which helped us to push rates lower for the week. And here are the national averages. Conventional 30-year fixed rate, 6.38%, down 0.17 nicely from a week ago. 15-year fixed rates, 5.87, down 0.11 from a week ago. 30-year fixed rate FHA and VA, about 5.7 to 5.75, down almost 0.38% from a week ago. 30-year fixed rate jumbos, 5.95%, down 0.17 as well from a week ago. Everything is turning a little bit for interest rates. Cross your fingers that trend will continue as we start to see more and more signs of the economy slowing. Moving on, multiple offers are back, just like I forecasted. We're into that season. A client of mine this week found their perfect home in Kirkland. Unfortunately, so did 19 other people. Multiple offers and bidding wars are back, and with rates heading lower and inventory still tight, you really got to be on your game to be the winner. That does not always mean the offer with the highest price wins, though. For our Kirkland family, they did not have the highest price. In fact, they were the third highest price, but they still won. Why? Because they were the most organized and their agent did an excellent job with communication. Along with the offer, the agent provided a detailed summary of the offer, highlighting the strengths of the buyer and also a short narrative of why they wanted to purchase the home. Additionally, our loan was fully underwritten and we were able to close quickly, further strengthening the offer. I always like to call the listing agent once the offer is presented, and that's something a lot of lenders will not do. In this case, the agent was really grateful for my call, and it also gave me the opportunity to talk about the strengths of our borrower and how well prepared they were. and also to give the agent confidence that our lending team was organized and competent and on our game. Our offer was almost $80,000 lower than the highest one, but our clients got the home anyway. It just goes to show that good preparation and proactive communication can sometimes be enough to put your offer over the top. Give me a call today to start your pre-approval. Make sure you're fully underwritten before you write that offer. That's going to put you so far ahead of everybody else in this game, especially if there's multiple offers on the property. I'm around. Just give a call if you have questions. If I can help you, you can call me 206-915-3742. Email me, eric@ericismybanker.com, or you can message me on social media. Just look for Eric is my banker. That's all I've got for this week. I hope you all have a great weekend. Talk to you next week.